Patrick, how will actually the mortgage market and mortgage rates, high mortgage rates, actually affect what's going on with regard to housing here? Because stagnation would seem to be the best outcome.
Yeah, true. I think it's a very tough situation for homeowners in Hong Kong when the mortgage rate earlier this year we just have 1.5%, and now I think the potential visit we could see like 2.5% mortgage rate. That is 1% more with the HIBOR increase, and also the concern will be like the prime rate still relatively resilient at 5% for HSBC, but it could increase further later this year when we see the Fed fund rates going up and up, right? So that's the situation we see in 2018, and then possibly will happen in second half of this year.
Yeah, we're watching those HIBOR rates, right? 1 month is at 2-year highs, which does impact the mortgages, of course. What impact do you think it's going to have on the housing market in terms of demand?
Yeah, in terms of demand, I think we see the correlation between the HIBOR versus the secondary transaction volume, and this is really negatively correlated over the past 5 years. So which means that when we have the HIBOR is going up and up, right, and then the volume will coming down further, and also in terms of home prices, we also under pressure when we have you see that actually the situation now is, right, we see the Fed fund rate going up, and also the Treasury bond yield, right, for 10 years also 3.4%, right? So it's quite high when compared with the investment demand that the home yield, right, currently is 2.2, 2.3% in Hong Kong, so low, right? So we see the huge gap here, so very, very difficult.
But I mean, you know, you've got on the one hand rates going up, the end of cheap money's coming to an end. You've got stagnation in the housing market. You've got very little demand, actually. That's the problem here, not much turnover. Where does this all leave these developers? Yeah,
for developers, I think it's also a challenge in terms of the new home sales, and also another problem is on the interest cost, because if you look at the 3-month HIBOR, right, it's going up even faster than 1-month HIBOR that paired to mortgage rate, but 3-month HIBOR paired to the interest cost is already over 1%. So, and again, right, the Fed fund rate going up to 3% or even higher, then your 3-month HIBOR will be similar. So, which is really difficult for them.